Hello, this is Joe Pryor of the virtualrealestateteam.com in Oklahoma City. One of the questions that I get from people right now is real estate still the right investment for me to make? Now, I am someone that never tells people to put all their eggs in one basket. I certainly don't do that, but I do have a pretty good stock of homes for investment, and I want to tell you why, and I want to tell you why I believe, one of the very strong reasons that I believe you should be investing in real estate right now. Now, we have a strong rental market in the United States. We're down to about 64% home ownership, which means we've got about 36% of Americans who are in a home right now or in a property of some kind are renters. So the rental market is very, very strong, and in economies like Oklahoma and Oklahoma City, it's still very, very good with a large population growth. But what is it for you? What in terms of return on investment? I want to kind of simplify this down. And I want to take a $175,000 purchase as an example. Now that's pretty much a price that's about in the middle range of what we sell for investment, starting at about $125,000 and going up to a maximum of about $250,000. But if we take that home, it's comprised of two things. It's comprised of the land and the improvement. So what I would typically do is I will go into the Oklahoma City, for instance, I'll go into the county assessor, Oklahoma County, and I'll see what they have the land value is. So let's say the land value is $25,000. It means we have $150,000 into the improvements. Now here's what the IRS allows you to do. It allows you to depreciate the improvements, but you cannot depreciate the land. Land never depreciates, they're not making any more of it, so only on the improvements can you do this. So let's say that if we do the right purchase, we get the right rent, that after principal, interest, taxes, insurance, and property management fees, your net is $450 a month positive cash flow. That's fantastic. But what the IRS allows you to do is take that $150,000 divided by 27.5, in other words, they're giving you 27.5 year term depreciation. And then I divide that by 12, and what I come up with is that the IRS allows us to deduct $454 a month depreciation for that home that's giving us $450. Now pretty much you can see that one wipes out the other. So pretty much we have $450 a month pure cash flow. Now, the other thing is that depreciation loss, although it's not a whole lot, can be carried forward as long as you own that property. And the second thing is you're going to make improvements to the property, you're going to make repairs, there's schedules for that, and that is deductible, and that loss also can be carried forward in terms of if your cash flow increases, that we can have some losses that will offset that. Now, the IRS also allows you to do a 1031 tax-deferred exchange. I won't go into the details on that, but very simply, it allows you to take $50,000 or $60,000 profit and not pay any taxes whatsoever, because normally you're going to have to pay part of that depreciation back and also capital gains. But this allows you to reinvest in real estate and not pay any taxes at all. So you can keep doing this your whole life and have tax-free income. So one of the big advantages of real estate, besides the fact it's easy to value, it's easy to control, it's bricks and mortar, it's tangible, is the cash flow offset by depreciation. There's a lot of other advantages to it, but that's the one that I really want to focus on with you today. It's a really excellent time in Oklahoma City right now because of home values are reasonable and rents are rising. It is a good time to buy investment property. It's a good time to have tax deferred and ultimately what might be tax-free income. This is Joe Pryor of the virtualrealestateteam.com in Oklahoma City, where Henri, my toy poodle, and I deliver traditional real estate values at the speed of technology.